All right, welcome to day 11 of the Trading Academy. Again, I hope you guys are enjoying the series, especially for those that are barely getting into trading in 2024. Hope everything has been making sense so far. If it hasn't, again, let me know, man. Comment. Don't be shy. Anyways, in today's video, we are going to be looking at the displacement concept, okay? Displacement, when I say displacement, I basically mean the speed in which the candle moves, right? How far is the candle moving and how fast is the candle moving? For example, you'll have a lot of structure that looks like this. We'll just go sideways a lot, right? And you'll have one big candle, right? Push up. And let's say your draw on liquidity is like, it's like all the way up here, right? You have your draw on liquidity. This is your target. This is what you're aiming for. You see this little consolidation, right? You get a sweep and then you get a big candle, just a very big candle. And then the following candle kind of just goes a little more, right? And then we kind of get a pullback, right? We get that higher low that you're looking for somewhere here, right? But you notice this big displacement up, right? You notice the big candle pushing up with speed, right? This means that the draw on liquidity could be at your target. It most likely will be, right? Because most of the time when you get that displacement and with speed, especially with speed, right? Speed is important with the displacement. Like if you see candles imagine the candles as people, right? Like it's like rushing to the target. It's like sprinting to the target. That's basically what it's doing. Okay. Think of it like that, right? When you see a candle sprinting, when it's just pushing up, when it's just, and you'll notice right now here in a little bit, I'll show you guys some examples. But when you notice a candle just going fast, you'll know what I mean right now in a second. When you see a candle going super fast, it's rushing to whatever liquidity is near it. Okay. Whatever the draw on liquidity is. That's why the displacement is going to help you figure out what your draw on liquidity is going to be, most likely. Okay. It doesn't go there all the time, right? But displacement is a very good indicator that price is most likely going to draw on whatever liquidity is near, external or internal. Okay. So let's go look at some examples here. And a good example here is the S&P 500 as of recently. Okay. So if you notice here on the right side, right, you'll notice the speed of the down close candles, meaning the bearish candles, meaning the red candles. These black ones might be red on your screen, especially if you just got TradingView. But these candles, notice how fast they are moving to the downside, right, compared to these ones, the bullish ones, the green ones, right? We're pushing up, and then boom, all this move gets erased by one candle, 1 4-hour candle, right? Same thing on here. Boom, right? We consolidate, we go sideways for a little bit, and then boom, right? We take out liquidity, this external right here. And then we have speed. Like this is what I mean by speed and displacement, right? This is a huge candle right here. Very, very big. Huge speed, right? We go all the way down. Boom. We have a swing low right here. Okay. We have relative equal lows right here, right? So price rebalances this, right? It just comes back up, goes sideways for a little bit, and then boom, another very fast, very big candle, right? A very big bearish candle comes down, boom, get fucked, right? Those stops are fucked now. Anybody who had long positions from over here and they trailed their stops up, they're getting stopped out right there. Boom, get fucked, right? Push up. Boom, speed. Look at the speed compared to the up close candles, meaning the bullish candles, the green ones, right? Look at the speed. Boom. Comes down and takes out all this liquidity here, right? All this liquidity, right? Again, one more time. Boom, 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 boom. Right? We have 1, 2, 3, 4, 5 candles, 5 4-hour candles. That's 20 hours, right? Boom. 1 4-hour candle. Boom. Huge speed and displacement, right? Take out all this liquidity over here, all these stops right there, right? So when you have that speed and displacement, okay, when you have the speed in which it's going, right? Boom, boom, right? This is moving fast, right? This is a 4-hour candle, so it's going to take a while to play out, but this works on any single time frame. It works on the 5-minute, the 1-minute, whatever, right? When you start seeing this sort of signature in price, when it's pushing down and every single pop to the upside is getting rejected and it just completely just moves very quickly and very big to the opposing side right here, your draw on liquidity is most likely going to be all these lows over here. And as you guys can see, eventually plays out, right? The 4-hour candle takes days to play out, okay, weeks even. But again, this is fractal, meaning that this works on every single time frame, right? Let's look at the 5-minute, for example. Okay, let's look at the 5-minute here. Right, like I just talked about this, right? If we're playing from the Friday low, right? We're looking at Friday low. That's the external liquidity. Okay, boom, right? That's Friday's low. This is all internal. Okay, internal from Friday's daily range, right? This is Friday's high up here. Okay, now we do get displacement above here, but then look how slow we're going right here. Look how slow. Boom, 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 boom. Then we have a nice candle there. We're very slow, and then bam, okay, right here, boom, huge candle to the downside. Okay, so this right here looks like we're going to go and take all of Monday's current internal liquidity, right? Because we don't know all this price action is going to happen, right? This just happened on Monday, right? So ignoring all this to the right, right? If you're just watching this is coming down super, super fast, okay? This candle here, this is the displacement you want to see. Okay, boom, right? We have all these lows over here to target. We have all these lows right there. We have all these lows that just formed on Monday, right? So we have all this internal liquidity, or actually external, because we don't know what's happening, right? This is Monday, right? This price action hasn't even printed yet. So we have this external liquidity from the weekly candle that just opened, right, on Sunday. We have Sunday's low, okay? This is considered external because we don't know if price is going to come down here or not. Right? I'm just pretending that we haven't seen this. But as you guys can see, we get the speed here on this 5-minute candle. Goes down, goes down, goes down, pushes up, right? We get speed to the upside now, and it works out for a little bit. But look, boom. Next 2 5-minute candles wipes all this out right here. So where do you think we're going next? The external liquidity. And then if we start zooming out, right, on the 1 hour, we have even more liquidity to target all the way over here, right? We have these relative equal lows, right? From way back when, from 2 months ago, almost, right? And you can target all this liquidity to the left side. This is information that you can utilize here to the left, right? The left side of the chart is always what you want to look for. Not too left, but in terms of liquidity, that's where you get your targets, and that's where you want to aim for, right? So to the left, we have these relative equal lows, as I just showed you here on the 5-minute. Right? If we're just aiming for Friday's low, it's a very good target to aim for. Boom. And it goes all the way down to those relative equal lows. Look at that. And then right there, the day just fizzles out. And that, my friends, is how you use displacement in order to identify your potential drawn liquidity. And again, sometimes like 5% of the time, you might not get that drawn liquidity right away, right? Maybe sometimes market will pull some shit like this. Right, we'll come down, we'll almost take it, but then it'll go up, and then it'll go down later. Okay, eventually though, the market will seek out all that liquidity, so don't trip. But this is how you use displacement in order to identify your drawn liquidity. Okay, hope I made sense there. Again, if you guys are not going on TradingView to train your eyes to see all of this, I don't know what to tell you. You guys have to put in the work too. I'm just showing you guys. I'm trying to put you guys on the right path to success in 2024, right? That's why I'm making this. That's why I'm taking my time out of my day, putting a lot of effort into a bunch of these videos, daily videos, that is, right? Because this is kind of a hustle, bro. I'm not going to lie. But all these are just basic videos. I want you guys to get in TradingView and train your eye to see all of this, right? Just mess around on TradingView, dude. You don't have to get in and trade real money yet, okay? Get in the paper trading stuff and just mess around, click some buttons. Start back testing. Look at the displacement, right? Look here. Boom. We come all the way down. We seek this low, and then we start pushing up. Boom, right? Big displacement to the downside. Well, guess what, right? Look at all these candles compared to the up close candles right here, the bearish ones, or the bullish ones, sorry. The bearish ones are going way faster to the downside, so we're seeking this low again, right? Boom. And now look, we push up to the upside super, super fast, right? Boom. And guess what? Higher low, higher high. Higher low, higher high. Actually, this isn't a higher high, but we come down, seek all this liquidity out, and then boom, right back to the upside. Big displacement to the upside. Big displacement to the downside. But guess what? We've already taken out all the liquidity, right? So this is a good point of reversal. And then guess what? Boom. 2 4-hour candles eliminates all this price action here. So guess what? Where do you think we're going? Higher, right? So come into TradingView, train your eyes to look for all these displacements, and then, you know, just backtest, right? Just practice and see if you can get it correct. And yeah. All right, guys, I hope you guys enjoyed this video on displacement. If you guys don't understand something, again, don't be afraid to comment. If I don't get any comments on these videos, then I'm assuming that you guys are understanding this and I'm explaining this in pretty simple terms. So that's going to be a good sign. Anyways, just comment. Let me know I'm doing a good job if you guys want. But if you guys are enjoying the academy, please leave me a like, sub, and yeah, catch you guys in the next one. Peace out.